So I've created a bit of visual aid here, which I hope to use quite a bit. Where we haven't got to yet is Steiner, what Steiner says about money. I'm going to try and get there sort of backwards. I promise I'll get there. But I put on the wall an image which brings together a number of things we've already discussed. And I think, again, this is an important way of appreciating what Steiner is really wanting to share or show, really. So the basic images, again, our little chap down here, our self-conscious individual, who is now having to learn not to think inductively or deductively. If he can stop either of these, then he will have a revelation. He will see the kind of future coming towards him, or the economy, you could say in this case, will reveal its secrets. And as I said, this is fundamental to economics, in the sense of economics has this special quality. It hardly speaks in these terms, but it's all the time assuming it's predictive. It's trying to well, in its terms, it's not necessarily trying to see the future, but it's basically that's what it's trying to do. It's trying to be predictive. And if prediction isn't seeing the future, then I don't know what it is. And so when you get into prediction, you have a problem, because you're going to have to get past the first stage of doing that, where you put out in front of you what you would like the future to be, so to speak. And that's always the problem for the human being, that the first thing we see outside ourselves is what we want to see outside ourselves. We project our biases and then see the world in terms of that. And sometimes you could call that a kind of Newtonian way at a stretch. It's what the problem of the Anglo-Saxons is. They don't wait long enough to get past the first plausible explanation of things until the phenomena speak for themselves, which would be a so-called Goethean way of doing things. I'm hesitant actually to call it Goethean, because I think it's just an innate possibility of every human being. So we can stop short at a plausible explanation of phenomena, or we can wait until they reveal their own secrets. And I am pretty sure that Newton also did this, but he's not famous for having done it. And so for a basic human being, when we get to the point, in order to be self-conscious and in the process becoming self-centered, we do have an epistemological problem. We will place ourselves front of stage. And that's the first thing we have to do, is then, in economic terms, stop thinking inductively or deductively, learn to characterize things, and then the future will reveal itself. And what we got to yesterday, this higher element here, which in the case of 2 ears is hearing, or 2 eyes is seeing, this becomes an instrument of perception. And I say that very specifically. You can start to perceive what's coming towards you. And if I make a certain image, this would be a sailor's image. When you're out at sea at night anyway, when I was out at sea at night, which is before you had GPS and other little tricks where you didn't have to do anything really, you had to scan the horizon. You knew from your charts that where you were trying to get to would have a lighthouse, and it would say blink, on some rhythm like this. But long before you ever see the lighthouse, you would scan the sky above your destination for the so-called lume of the light, because this blinking would first show up from your point of view as a reflection in the cloud or in the sky. So you would always look for the lume of the light, which would be doing this, and that would lead you, and gradually then see the light. And so I use this image because when I say sense, an instrument of perception, of course, it's not going to be crystal clear or obvious or self-explanatory necessarily. It's first going to kind of come out of the mist towards you. But nevertheless, it will lead you to some understanding. And I use that image because when you start perceiving economic life, you're actually going to see it in someone taking an initiative, and it's going to be hidden inside them coming to you if you're a finance guy and say, look, I need $1 million to do this. You can't see what I want to do. I can. It's in the back of my mind. But eventually it'll be in the front of my mind, and then you will see it. You just have to basically give me the money and let me reveal this to you. And so in that sense, you would never see the light that's behind an initiative. First, you see the loom of it, the forecast, the financial projections that the person taking initiative has made of this. And you can, of course, say that's just a bunch of numbers, but not really. And if you do proper financial planning, you would go into a huge amount of detail, because when you do a forecast, the clue is in the name. You're casting in front of you what do you think you're going to do. You haven't done it yet in the back of your mind, but you're making an image of what you're going to do. And so you can say these are abstract numbers, but in my experience, it's not the case. If you grill somebody, they will know what their numbers are, and if you challenge them, they will be able to answer out of their kind of innate sense of what they're trying to achieve. And in French, you don't say forecast, you say prévision. So it's a much nicer word. It's your prior vision of what you're going to do. So I'm not inventing this. The vocabulary is very helpful. And more than that, you will find in finance very precise vocabulary. Once you understand that finance is an instrument of perception, then you will understand a lot of subtleties of the language, like forecasting. And these are not trivial matters. So much for this. And now I've cut it up a little bit because I wanted to make clearer that what I was saying yesterday, it's again the kind of what I call the epistemology. You have, I gave an example of two ears. They're not identical, giving you a sense of hearing. These are not of the same, they're not identical, and this is a higher level. And so here I've done it in the first place, through color coding, as it were. Clearly red is not blue. What's on the right is not on the left. And this one is above the others. But in the imagery of perception, this yellow one up here works through the other two. It kind of doesn't have an existence unto itself. And I think this is a very important story. It's, as I say, it's how perception works. It's how you see beyond yourself. But I'm now going into finance and financial literacy. So yesterday, when I spoke about the agreed kind of definition of, or I should say a characterization of a central bank or a monetary authority, I put it up here, monetary authority. This is some kind of organization which sits above the fray of the markets, above the trade market or the capital markets. I've written this on here. And this image is very important because it's an image also of the human being. You're in your whole, the fray is your whole active will life. You're in business all day long, and you need somehow to lift yourself up and review what you're doing on a regular basis. This is often very difficult to achieve because you're in business, you're in the fray, and the fray is not going to pause while you take time out to kind of reflect on what you're doing. But nevertheless, you have to somehow manage to do this. And it's one of the things that good accounting, accurate, precise bookkeeping enables you to do on a kind of ongoing basis. And and also, I would say, as an entrepreneur, not as a trainee, not as a manager, not someone coming from a business school, but if you're an entrepreneur, if you're actually responsible for the capital that you're employing and making use of, and if you're really in business, you already know your accounts. You know every single deal you did, made or didn't make you money. And it's always a problem for entrepreneurs because when they want to do bookkeeping, it's always going to be a waste of their time. So because they, if I know I've made money on a deal, why do I need to waste time proving it to you? I already know it. It'll come out clear at the end of the year. If I've made a deal and I know I lost on the deal, why do I want to add to my losses by, by taking time looking at them? So the entrepreneur, the one who's sort of in the fray, has no, he has a vested interest in the technical sense in not doing bookkeeping, passing that on to someone else. And that's okay, as long as someone else knows what he or she is doing and isn't in the process giving you wrong information. Or if I always give the example of Leonard Cohen, who isn't, meanwhile, using your money for other purposes, so that when you come back, it's actually not there. And so I totally get, obviously, that you can't build an economic life on everyone doing their accounts all day long. That's going to have to be factored out somehow. But the person whose accounts they are is the only one who knows what's going on. And so the very minimum is you need to be able to understand what accounts are and what the information your accountant or your bookkeeper gives you is really telling you. It tells the person doing the books nothing. They might give them external information, but it's not their activity. And only the person who's active can know why he or she didn't meet their sales actually. And a very simple example is in the street where I live, where we have lots of coffee bars, as a young guy started a coffee bar, and he was very proud of his hours. But then when he started, he was a bachelor, and his hours were very ambitious. And then he fell in love with a girl, and then he started kind of arriving later than his hours, and he started annoying his customers by not arriving when he said he would. And one day he blamed it on something, and they said, "Why don't you just tell your customers you've fallen in love? They'll understand that. It's not an excuse for not opening." But don't start blaming the markets or blaming the weather or blaming something else for the fact you couldn't get out of bed in the morning. Because that's really why your sales aren't where they are. So or you can have other examples where someone, I'm always running on the level of self-employed people, where someone really thinks they're a carpenter, but you see month after month they don't meet their sales as carpenters, and it's probably because really they should be a teacher or they should change their profession. They don't need to change their numbers, but they could change their job. And your finances will constantly be reflecting you to yourself. No one will know this because it's not, they're not being reflected. They'll know it when they look at their numbers. So anyone who's doing numbers for you outside has no way of knowing the meaning of these numbers to you, and no way of knowing or reacting to, okay, what do I have to do to meet my targets or whatever it might be. So when you really go into accounting in this way, and you have regular accounts and management accounts, not just the little bits that the revenue wants to know about, tax office, the detailed stuff. And when you've set your chart of accounts up, so they're very detailed, they're a very precise profile of your kind of business, then you're constantly recording this information. It's like a running video of what you're doing, you might say. And at any point you can stop it, and then you have a snapshot of where you are and whether you missed your sales or you didn't, or achieved them, or whatever it might be. And so it's like a permanent reflection of you. And hidden inside that will be, I'm not going to get into financial planning, but if you set out with a set of forecast figures in your budget, and then you trade, and then you put the actual figures of the month in, then you will have the difference. And in this, you can start to see, this is what I intended, this is what actually happened, and now I can comment. Or at least I'm now going to have to do something because my sales are not where they were, or my expenses, And so once you can, for every line, for every part of your business, when you have the budget compared to actual and you have a difference, then you can comment consciously or unconsciously, and then you can say, okay, I've got to go fast or slow or change course. And this becomes second nature if you have regular review of your business in accounting. And so it sounds onerous, but in fact, it just becomes second nature. So on the one hand, your unconscious intentions as someone taking initiative has to become first nature. You have to be able to reveal it, at least in numbers. That may be quite some effort. But then when you've done that, all that becomes second nature. You can go back into your kind of semi-conscious operating. And this is, I'm saying this because when I talk about financial literacy, I mean on that kind of level. You know, we talk about financial literacy very simply today. We basically mean, the people who talk about it, basically mean making sure you've got a bank account, you've got enough money in the bank, and know how to use the credit card system. And I won't get too critical of it, but that's what they mean by financial literacy. I mean learning a language. And when you learn a language, you can watch anyone, or you can't yourself remember how you learned a language, but you can watch a child learning a language. And there's a lot, there's a lot that they take in, there's a lot they give out, and you can listen to even when they're still sort of babbling, you can start to feel or hear words in among the babble, and you can even start to hear sentence structure. You know, where they're actually saying something, it's not in clear words, grammatically correct, but you can feel this word is in the right place in the sequence of a sentence. And all this is a kind of to and fro where it goes deep into your being and then comes out, and eventually you are literate. And so this is what I mean. You have to, if we talk about financial literacy, I mean on this very, what I call deep accounting, very, very deep level. You learn your accounting is just an instrument which is part of you. And therefore this what started out as epistemology is this heuristic device I'm using instead of this one, instead of price, quantity, supply, demand, instead of all that device, throw that in the bin. Thank you, Samuelson, but you know, we're done with that. It's not me saying we're done with it. You can find literature that we have to move on from Samuelson. It's a kind of trap. It's just one version of events, and it's not even the best version. So thank you, but no thank you anymore. And so this heuristic device is very, I won't say it's carefully crafted, but I've been very careful as this is developed over the years as I've used it, because just leaving on the wall behind me, but in front of the listener or the viewer, this is burning into your mind all the time, even if I say nothing or if I keep talking about anything. This has much more effect than the words I'm saying. And that's why I mean it's a heuristic device. And so it has to be one has to be very clear what it's doing and that it is doing it. So all the time I'm ordering your mind by saying quietly saying there's this level of, there's two different things, and above this is a third thing which lives through the other two. So once we get clear that, and then we build our accounting about on top of that image, I've then put on here a couple of things we said yesterday. So one of them was, this is the monetary authority. Sometimes I put central banking, but I want to go back to Keynes' expression in 1923. And monetary authority is more generic. That could include a central bank, but there are lots of versions of this. So I said monetary authority because, as I said, it's anomalous that today, when we're supposed to be having our agency, we've created all these authorities outside ourselves. We call all these regulatory agencies, and we call them authorities. It's like, kind of, why? But okay, from my point of view, if we're really sovereign, if we're really grounded, we should become a monetary authority. We should be able to lift ourselves up out of our own behavior and make our behavior more conscious, because that's all the monetary authority is going to do to us. Or that's all it hopes it will do to us. It doesn't necessarily work. And more, what the monetary authorities want us to do is not a match for what we are doing or what we want to do. So they have quite a problem on their hands to manage the financial system. And then I've put on here also some ground we covered yesterday. So I have here, I think, buying and selling, spending meaning buying and selling, lending meaning lending and borrowing, the two sides. And then up here, as we discussed, balancing revenue and capital, brackets giving, meaning, as I tried to explain, that, you know, of the three uses, giving is kind of, where do we put it, and where do we put the third function of money? We have means of exchange, store of value. So where do I put the unit of account? So they're just, first they're hanging loose, unallocated, but I put them up here together. So I put that discussion on this drawing, and that discussion can now go quiet because it's in the drawing all the time. And then what you can start to see there is on that drawing, on the same heuristic device, if I made a very clever PowerPoint of it, I could take away everything on there except the monetary authority above the fray of trade and capital, I mean capital markets. Then I could lose that, and then it could come up with spending, lending, giving. So I could quietly just take away all of these different things I'm putting on there, and you only see one at a time. The point being, it's the same story showing up in different ways. That means we're now starting to get traction, because I'm now linking the function of unit of account, in this case, to the central banks or to the monetary authorities, and linking quite deliberately means of exchange to buying and selling and to the trading. And then deliberately connecting store of value, which may be wrongly named, that's not a concern for mine, to borrowing and lending. And to this, in this way, I'm now linking these functions to the general uses we spoke about, and they're all sitting on this one drawing, and I'm not forcing them into that place. Every time one has to ask oneself, does this make sense of these particular experiences or phenomena? I mean, in my view, they do. It's very difficult to put them anywhere else once you start seeing like this. I'm not going to spend time now on doing it, and haven't in fact done it. But I think I'd be interested to see if someone could rearrange this drawing or come up with a better way of explaining these threesomes that you find everywhere. So for me, this is all about becoming financially literate, learning the language of accounting, and learning it's not just an abstract language. It will affect how you behave. So you're going to have to do what the Americans call walk your talk. So if your talk is English, you're going to have to walk English, if I play with the metaphor. But if your talk is clear finance, you're going to have to walk or do clear finance. And we now have another aspect of economics, just as it has this special feature that it allows us to actually see the future, but via the unfolding will of the person taking initiative. It's not a train coming down the track, and it's not something you can calculate, and it doesn't need an algorithm. That won't be very useful for what I'm talking about. Just as it is a means of perception, a way of seeing, it's also a way of managing guiding your own behavior. So this is a very serious thing I'm talking about here, and a way of ordering our experience in economic life, finding out where we are in economic space and knowing how to behave. Already, if I talk about, for example, the monetary authority and the fray of the world of trade and the world of capital markets, this is the global financial architecture. So already, I could give a whole lecture with this. I could take everything off there except the global financial architecture. And then what I'm describing to you is the global financial architecture, which is in huge question at this point in time. But from this drawing, no way. It's a way of understanding it. And in fact, then getting hold of it. Not by the guesswork or the hope work of efficient market hypothesis type thinking, but very, very precisely.